Hello traders, this is Alex with the Commodity Matrix. We are going to have a little update today. We're going to go over the grains. This is my X account, kind of my standard intro that I normally do here. CBOT Man 33 is my handle. Um, I post stuff here to review, kind of a nice place to dump stuff. Okay, we're going to review the commodity side today. This is the corn, beans. These are the ones we'll be covering. You can kind of see the list there, and this will be where we do the charts on bar chart. I use the free part. But you can pay for it. It's a good service. I recommend it, even though I'm not sponsored by them or anything. I said I wasn't going to update it for another week or so, but I kind of changed the format a smidge. This is, we're going to do a little faster pace. Normally I did the quarter moons for time, but now we're doing the waxing and waning crescent moons, right? They're 3 days in length is all. So some days there's no data if there's a holiday. But here's the kind of the trade sheet to the margins. I also added Bitcoin and Ripple, figuring $5 grand a piece for those from where we got in. So we'll go through them here real quick, and then we'll, if we have time, we'll go through the bar chart data. Now, what I'll probably do is divide it into this first 10, which will be the ag sector, and this will be 7 of them will be crude, nat gas, S&P, gold, silver, Bitcoin, and Ripple will be the second half. Now, I will divide this video into 2, so you can watch the comprehensive, right, which will have all of them, or you can go to the grain one, or to the, I guess you call it financial one, if you want just that stuff. All right, let's move right into the corn. And you can see with the waning, waxing moons, your data is quick. And it was hard for me to do, to update all this stuff, but I think it's important, right? We're still kind of following the same principle. We're not using the 3 quarter moons. I might still every once in a while put those out because I still keep track of those, but for now it's going to be more of a swing chart based on the moon cycle. And again, of course, square root of 9 hasn't changed. So yeah, let's go through it. Here's the corn. Again, we talked about buying this dip. It was successful. We had a power up. We bought it here, I believe, on this day. Now I bought 2 cream stuff, right? The CORN, the SOYB, and the WEAT. Kind of created my own index of grains, but I bought it here, kind of picking a little bit. Now, if I was trading futures, right, which I'm not right now, I would have done options, right? Which, if I pick, I use options only. Don't have to worry about a stop as much. Because I'm a time guy, right? This is the time that you normally make a low or high in the grains, typically, right? Mid-July, July 4th to July 12th. Now, we're in that zone here, so maybe this is all we have. And that's the case, I'll get stopped out with a break even or small loss. But you can see this format, I've got them colored a little nicer. Again, because you got a lot more data. You can go back. All of them are plotted from September 21, 2025. So that's the solar, right? Again, you can still see the importance to me for the solars. These color coordinated things are, again, still half to get this yellow and quarters, right? So, or 3/4. So it basically, if you took a Gann wheel from the solar eclipse, these are your angles, right? In sense. All right, let's move on. Let's go to wheat. And you can see here we've got, I haven't completed all my trend lines up, but you can see that we're powering up here pretty good. Again, all the grains had some activity yesterday, Friday, Thursday, Wednesday, maybe even, but we did not bust the short out yet. We're still short with the stop right here on the wheat. Now it had a more aggressive thing, and we're assuming we're over halfway through harvest. Again, I waited, even though we were bullish fundamentally, I waited because I always wait till about halfway through harvest, and so I bought this low. Here's the beans. Again, from the beginning, when I started plotting this waxing and waning periods, you can see it's kind of nice little coagulation. We got long here, put stops here, pretty simple stuff. Probably I would have went under the low, but again, I'm using kind of a formula I've learned over the years not to guess, just let the formulas, maybe it's AI, maybe it's moving averages, stochastics, whatever you figure out. You usually don't trade off of them unless you have a specific rule. Here's the meal. Again, the problem with the beans is the meal. It's a dog. We were above the solar eclipse, so we made a nice event low. And like I said, the last video when we were down in here, I would buy the meal or meal calls instead of the beans, because again, if the meal don't go up, beans aren't going to go up. Now, oil's a different situation. We are powering up. We came off a super bull market, and we'll look at that more on the bar chart. But it's the stops are right here, so pretty critical area. Nice little correction, right? What's the definition of a correction? You got to break stuff. Well, we broke the uptrend line and we broke a swing, right? So we officially got short. Oh, those prices aren't right. We officially got short right there. So pretty interesting on its own merits. Hang on. Okay, I changed the oil. Again, I just got done to finish this. I didn't go through it, but so I changed that. Okay, let me go back to the bean oil. So if, yeah, we officially got short here, right? Actually, right here. Dadgummit, 72.79. 72.79. This is all unofficial, right? I'm not actually trading all these. It's more of a learning for you. So you should always take buy or sells with a grain of salt. But you can see why I sold it here, right? Um, Again, I'm also trading the spot chart. Normally, I would never do that in a million years, but it's the only way I could get the data. So we'll just, again, assume, right, that there's some a squish in these activity, and always double check what you're doing with whatever month you're working with. Anyway, so we sold it here, stops here, pretty basic. You can see we got the 1-to-1 coming up. 45 degrees over will be in here as well. Again, this one, this is the halfway between between the two solar eclipses. The 66 market day that I used, Matrix or Gann used, 90 degrees, right? Either way, it's right in there. Kind of missed the high by a bit, but pretty close. Usually things kind of fall in line, so it could be a secondary event or maybe a bone high here, really get rocking and rolling. And of course, if that's the case, I would be looking, let me just copy these, for that push. The 22 days is always the irritation, right, on the Gann wheel. This is the kind of irritation zone, and then 45 degrees would be kind of my pick, and that's right in the solar eclipse sequence. So it's definitely possible this could be a buying low. We broke it. It is a true correction. If we're going to see new all-time highs in bean oil, this will be the measuring pivot to do your homework on. Here's the cattle. Again, a lot faster pace, which I like. Cattle with the quarter moons are just too slow. You can see, though, we have a double top, which is highly unusual. But it broke it, went above the eclipse, now it's below, and it didn't only just do it, but again, I'm assuming some of this was a rollover, maybe from June to August, right? Because again, we're trading the spot. So this is a power out, power down. We sold it right here, which again is obvious, right? And our stop then is above the highs until we get a little wiggle in here that we can adjust the stop to. Here's the cough again, bull market city and then bear market city, and down we've been pretty aggressive until this last push. Problem with this is still too slow. 16 days, 37 grand or something. It went up 70 some points. That, even a 2-day, 3-day chart's too freaking fast, or excuse me, too slow. Our stops are still under the low. So, but it's no big deal, right? You understand that. I mean, if I was trading, I would probably be looking at an hourly chart or something where you get a little more logical area. Now, it makes sense that we went through these old highs by a little bit. That's what it normally does. And it could break all the way back to the solar eclipse, I guess. Now, that would be kind of more bullish than bearish, in my opinion. There's a good level of support there. We bought it here, right, on the go, and our stops over under the lows, which kind of suck ass. Here's the cotton. Again, pretty good bull, right? We started this flat market for quite a while. We finally powered up, went above both eclipses, and then we just started the journey. Again, to me, this is trading undervalued, right? It has the characteristics of an undervalued market. Again, what do you see in an undervalued market? You see little coils, little pennants on the daily chart, flag patterns, right? That's when you start seeing those patterns and they're working, that means you're more likely something fundamentally has changed and you're undervalued. Well, I like this little break. It's not aggressive, right? Again, a true correction, right? It broke something. We broke the swing, kind of broke some little pivot, at least on this chart. Again, we're trading the spot, so it's a little more tough, but the stops are down here, makes sense. I like that. We're above the 1-to-1 going back up, so I wouldn't be short this market willy-nilly. You better have some reason. And again, the quarter time period was the low, so again, I like the cotton on this whole deal. Now, the tendency, if this was leg one and this is leg two, we're setting up for a fast market, right? That's pretty fast. It's not a long time, so we could make highs by the end of the year and be done, right? I mean, at these paces, you're looking at, if this is, again, I multiply things times 5. If this is your first leg, and we'll just round down to say 50 because that's easy math. 50 times 5, that's 250 boxes, right? So we're looking at potentially new all-time highs if this holds, and that's the pivot. Man, that'd be cool. Again, cotton's been a sleeper, right? So those are always tough, falling by the wayside. Everybody's focused on focusing on silver and gold and stuff like that. Here is the sugar. Again, nice correction, broke out the lows on the spot chart. I was trading March on the other one. I didn't show this, right? I like, if you ever follow me, I like bear traps like this or bull traps. So I expect this market to power up minimum, right, to take out these highs and have a trap up there. We've already proven that it can do the trap. For every action is equal but opposite reaction, right? Newton's third law. I like that. It's about the only thing I like about Newton. Otherwise, he's a wacko job. But it applies to the physics and the psyche of a trader, right? So anyway, nice momentum. It's obviously a trader's market, a sequencing trader, right? 23, uh, excuse me, that's 13, uh, that's 8, 9, 10, right? So you just kind of, you can see that these are sequential enough, right? That you can kind of watch them and wait for the trend change. Even a small one, you're going, okay, it's getting ripe. And we know this was pretty good support. This is a solar eclipse close, right? This is pretty good resistance. That's our other previous solar eclipse back in September 21, right? So that's a perfect range trade for the eclipses that I do. Here's the orange juice again, a power down, right on the zone, right halfway through. Nice little buying area. If you're now again, it's a crazy market. It just came from all-time highs, the biggest market in history. So it wasn't that easy, right? It was scarier than dog snot. More than likely, you wouldn't have been trading it or shouldn't have been trading it. And again, you can see this is too quick. Maybe the quarter moons didn't show all this. This has a little more swinging, but stops are where they are, just because that's kind of how I'm playing it. But logically, the resistance is probably the solar eclipse, right, for the traders out there. And again, we did pop lows, so we could pop highs, right? I mean, that's the range I think you got to assume until we get into some colder weather in Florida. Okay, first up is the corn. And you can see, again, this is all going to be spot continuations. It's got the huge Acoli. Big crop underway, more than likely. Be a little cautious. It should have went down. It is not. July is a low. I always buy July lows if I can. If they don't run out without me. I like to buy July 4th to July 12th if it's a low, or sell if it's a high on July 4th to July 12th. It's a simple thing, right? God, don't beat your head up. These options, pretty simple. Options are dirt cheap down in here. Here is November beans. A little more positive, right? You can see the uptrending chop. And this, big target, right? That wasn't that long ago, so we're still feeling the drunken after effects of this all-time. I don't know if it was all-time high. No, but it was a high push up against the highs. It's a big market. Now we're back to, $12, which historically still pretty freaking high, by the way. But the margins are fairly reasonable. But again, if I was bull, I would trade the. Come on, I would trade the meal. Or this is the wheat. Shit. I was gonna do the dramatic effect again. Broke out back here, back in February. Pretty typical, right? And I think I like the wheat. My index that I kind of created with the 2 cream stuff, I really lean more into the wheat, almost 2 to 1, because it's halfway through harvest, and we know we ain't going to increase, right? More than likely, it'll probably decrease, right? Short crops get shorter, the old adage goes, and long crops get longer or bigger. Here is the meal. Again, if I was a bull on the beans, I would lean into the meal. The bean oil that we'll look at, it's already on its highs. So if the meal takes off, I don't care if oil drops, it's going to really help the beans. I think that's what's keeping it down at the moment. Now, maybe it won't. Maybe it'll be a dog with fleas. You get up on the backside of this. You can draw a trend line in here. You get on the backside of it, and it makes sense in, right? Something like that. Backside of the speed line, kind of averaging out. Somewhere up there makes a little sense. That's going to be a little tough. Halfway, maybe 62% back of this range. That kind of thing, right? And then, of course, you got to come down from the highs. And you can see we hit all of them. So obvious cross right in here. We'll just round up somewhere like that. This area is going to be a tricky spot. Either one or two things are going to happen. Either we're going to fail miserably, or we're probably going to gap and go and break this whole thing up, right? Again, but hopefully it follows through, right? That's again the definition of a correction. You got to break shit. Well, if it breaks up here and then falls back, it's more than likely just a Glen Ring pause, as the old Mr. Glen Ring used to say. Here is the cough. It's been a wild son of a buck. We talked about it. We can still see we had the lines in here since we did the last video. And, I told you where it was going. We did the math on it. If you go back and watch the last video, we missed it by a smidge, but it was right in the hunt. Now let's check it out. Now we are 17 market days and high of 357. Right. Well, that's some money in the bank there. That's the 50. We got to that 50%. We talked about it in the last video. This was the target. Obviously, you should have been focused. Again, I'm going to do a little lesson here. I do this once in a while on other videos as well. But you always want to know where to forecast, right? Well, simple thing. This is simple. There's your pointer at the end of your gun, the red dot at the barrel of your shotgun. You line that up best you can, and you go to 50%. Gann always talked about 50% as being the the miracle, let's take it from the close because that was the highest close, 50%. So it was again right on it, right? But it pointed to it. Now we didn't know the days, and I'm not stopping here because it's on the high. It's because it hit 50%. Now, if we continue higher, the logical, oops, the next logical spot from that point, dadgummit, from that pointer, that red dot. If you're a Fibonacci guy, we got another zone right in here. And since we know that's a high now, we'll keep it lined up. But there's 60, close to 62%. The target's 386, but we've already met the time. So again, that's not, then the logic moves on, right? You just keep working. I think 75 would be my next target, 75%. And there's 75, and that's definitely in the range. There's 75 on July 17th. Now, you just keep going, right? If it trades sideways more, you go up and you run out of time, again, because this is a time and price tool. Gann always talked about 50%. Now, I'm continuing that onto the next retracement levels. 100% is logically a good area too. That double your 55 or 50%, right? And that would be, percentages up are a little better than percentages down, just because of the math. Simple deal. There's 99.9. Good enough. So we're looking at 100%. If it's one of those aggressive moves, and we're red dot at the barrel of the gun, and we already hit it. So this is the speed line as well, mathematical. But we're looking at July 29th. Now let's just do an extra little homework job. Yeah, dang it, hang on. I gotta get it so it automatically logs. There we go. There's a couple here that make sense. I'm gonna double that, and I want to see where this falls in line. All right, let's just do this one. And that's 66 market days. Of course, that's my deal. That's my matrix. Let's just change the color. And again, I know a lot of people don't trade coffee, but they should. It really technically works pretty good. At least it must be a Gann thing, right? Okay. Oh, so. Let me run it down here and let's duplicate it. So again, there was our target at 100%. And then, so again, all these are in the range. Here you can see we got multiple speeds here lining up, and we're kind of above that, right? So if this is a moving average speed, we probably break back. I think as long as we don't break this whole general philosophy, we're on a pretty good aggressive move up. And again, the fast one here was, let's switch over. Let's change colors again, just so you can see it. Let's change it to green. That's the fastest you could possibly scrape up, maybe a little fast. And you can see we're right in the hunt of that as well. And it falls on July 17th. So, 17th. So again, that's a pretty interesting. That's a shotgun theory approach, but it's mathematical. We're replicating the previous speeds, not percentage-wise, but just points-wise, and then our Gann projections based on 50% and now 100%. The double-double, so to speak. It's 34 market days. Of course, 33 is half of the matrix. So let's bring it back to half. That'll put you at about 972, we'll call it. We'll round up a bit on July 28th. So, and you can see 55, here's 66, almost 67. Let's round down on that one. Oh, that's 55, wrong one. Again, 11-day market days are the matrix. And you can see they fall in line, 33, 55, 66. This one will go to 77 just because I can. So you can see how the math lines up. And coffee is one of those that just gel. So 33, half 66. Again, half of the matrix. My old rule is if 33s should be a buy, not a high. If this is a low, so again, if it breaks back, that makes sense to me. I'd be pretty bullish. Also coffee, because again, that's just a simple rule. 33 should be a buy, not a high. If it's a high, you get out. Well, that's halfway. You should have been out, right? Let me see, how many days was it? 17. That's half of 33, right on the hunt. So it'd be nice to see it break back. Anyway, let's move on. Geez, sorry. I could talk charts all day long. Here's the cotton. Again, one of our nicer bulls with gentle, really. One by, let me see, I don't know what the speed was, but it didn't increase margins terribly. This little break back was all it had. Oh my, that's bullish. Don't be short cotton. Makes sense to me to if you're a day trader, right, buy any little dip. like this, right? You had this inside day, broke out the low, buy that, put a stop somewhere, maybe down below the low, right? Once you know that you're comfortable buying like it did back here, you might not have known until you got up here, but every little opportunity, it took out the lows here by a smidge, maybe 10 cents or 20, 30. Those are kind of the breaks you buy and you trade. You can put a stop in and pyramid a little bit if you want. Here's a little 2-day break, but just couldn't, points wise, it was nothing. And then we set the high, broke back a smidge, right? ABC. Here was your buy again. And just every day you can buy like that little smidge break. That's all you're going to get. Again, in my opinion only, we are undervalued in cotton. We're trading undervalued in cotton. Now maybe we're not, and they're just doing it that way. But I've got a gut feeling that dormant market, that the sleeping giant is not sleeping anymore. It's waking up, and those are good to trade, especially early off. Right, it's still cheap. It's not all time. You're not trying to trade all-time highs and scared to death. Here's the sugar, another chopper. I like that bottom. Could take out lows. I guess it wouldn't scare me too much. I'd buy a new lows. I have a hard time buying strength though, right? Like Gann would normally do. I couldn't do that yet. That's not, to me, not the market to do that. But again, you can see we've had 10, 11 days up, and a chopper that's about as much as you get without some little weird anomaly pullback. Here is the orange juice. Again, a soft trade. We talked about possibly, again, just this market making new lows on the rollover effect, right? That's the commodity issue. We're already down 75, so I can't sell it down there, but I definitely couldn't buy it. I would wait maybe for a new look. I guess to me, there's just haven't been enough time. The bull was just right here, right? 2024, a year and a half ago. It's just not enough time to be comfortable or just to power buy it. And we're down 75. If it breaks that though, then you got to do the math on the 85% level. Every bull market breaks between 65 and 85. 75 is in between. I don't really need to go down there. But again, the silver, 65 to 85 is normally where the low is going to occur, somewhere in there. Gold, same way. Just count on it. It's just a natural selection. 50%, it usually goes through that one. Sorry, Gann, I don't believe that one in this era. Or maybe hurricane season might put a whammy on him or something. Again, here's the crude. Again, pretty fast setup. I didn't want to start it too slow. And now here we are. Again, a spot chart though, a little different than I was trading December, right? Kind of sold it here and really never had it stops adjusted. It was here. Now we're here. So we're still at a loss, even though we're way down here. So again, it's a little slow. Even though we switched to quarter moons or to waning, waxing, crescent moon stuff, it's still a little too slow. I mean, I would be trading it probably. I would have been out of this, I think. Again, that's a fill in the gap, fill in the close, technical stuff galore. Now, I'm not saying that that's bullish, right? It closed like crap, but as a trader, you make a big wide. You hate to like put a stop way up here and lose. You got 20 grand made and you lose 15, right? Because your stop's way the hell up there. So again, obvious, but if you're truly a system trader, you have to change your speed. If you're aggressive in crude oil or silver, particularly these and gold, anything that's been really wild, you do your same formulas, but you just you make the speeds faster. I went from a quarter moon, which is way too slow for silver, gold, and even the waning, waxing moons are 2-3 days, 4 days apart. That's still a little too slow. You probably need to use a different speed, right? You got to just keep breaking it down mathematically. And you can see that right now, this is between the two eclipses is 48 waxing, waning, quarter moons, everything, right? And using the quarter moons, there was only 24, right? So again, we've increased the speed and we have more boxes. Anyway, here and there, pricing still kind of remained the same. So again, I could adjust the speed until it gets a little slower, I guess. But that's tricky to do it and keep it up to date. Here's nat gas, kind of the hero, zero of the bunch. Last year we've been, again, you can see in the winter we fired up, had some wild action because of Texas storms and whatnot. I don't know, it's kind of they don't think it's going to freeze. They don't think it's going to have snowstorms. I mean, it's just amazing how I think all these AIs and everything and all the news, right? They're betting on weather. So be a little cautious on what you see. They got so much news focus on weather because people are betting big sums of money on it. So be a little cautious. But you can see we're above the solar, kind of both solar eclipses are right here, right? And we're coming up upon the other one in August 12th. So that will be 1 month from now. So this bar right here that we're on all these charts are pretty key. And I think you want to make sure that, because I like to kind of watch a month before, right? Before anything. You know, if I was focused on this one, I would have been looking at May 16th, which was right in here, right? So again, a month before that, you always kind of watch it. It kind of gives you a hint. You know, here was our solar eclipse. I would have been amped up for that. That was January 16th. Was the zone, and we were right in here, right? So again, a month before is always kind of key for any cycle. I don't care if you're trading the solar eclipse, lunar eclipse, Jupiter, Mars. I don't care, right? You look always a month before, or if you're trading cycles, let's say you're cycling out the highs, you kind of always keep an eye out a month before or a month after. A lot of times is technically a pretty key, but you can see that I put the stops down here. Now, really, they should have probably been here, but that's so fast on a chopper. I decided to opt out and put it down here. You know, we had very narrow range in here. We'll see. Probably wrong thing to do. Always sounds good at the moment. Every time you go back and look and change your rules or into a thought process or guess, I guarantee you the system is normally right and you were probably wrong. It probably cost me more money. But here is the next one, which is S&P. Obviously, an easy buy. It just went up and then busted. And you can see close on the high, close on the high, close near the highs, close on the high, close on. Again, what's that tell you? That tells you it's undervalued, right? You get these little coils, hesitational patterns on the daily chart, which we'll look at. And then you finally had your first correction, right? It took out a swing and it took out the uptrend line, right? It broke two things. That's a definite. A correction is not a correction until you break stuff, and we definitely broke it here. So this is leg one, leg two. Be a little cautious, closing on our highs. The Trump effect's in full bloom. I won't go into that at the moment. Here's the gold. You can see we powered up from the solar, a great buy of the century. We popped it out. We actually did not make the high on the solar, but the lunar was, right? So it kind of evened out, I guess you call it. I don't know what's the exact term I'm trying to think of, but and then we failed in typical fashion for a boom bust, right? A bull to a bear. Agreed, right? All the way up, and then now we're in the hope stage, all the way in here. And now we're starting to get into the fear stage a little bit. Be a little cautious just buying willy-nilly gold and silver. Margins are coming down, I assume. I haven't looked, but that's a two-way street, right? The sellers can also sell more. Here's the silver, kind of the same situation. Stops are pretty tight, though. That's a good thing. And maybe too tight. Probably should be up here. Again, it probably needs to make a new low before you really push it down. But it's here nor there. That's, again, I would even be trading an hourly chart on silver. It's just too slow of a, even especially quarter moon. It's like trying to trade a monthly versus a daily chart, right? Here's the Bitcoin, another active market. Logical stop, right? Because this actually made a new low. Stops are logically going to be put here. We sold it right here. I don't know why it's at 73.91. Should be 74.541. 41. Again, I'm just kind of getting stuff updated here, but it's a different look, right? I like it actually. Been wanting to do this a long time. Takes a long time to set all this up, and then if you go, oh, that's too fast, and you got to redo it. So yeah, it sold it at 74, and the stops are, that's correct. So you can see why we had stops here. It's logical, right? We only had one swing, and then it went up, made new highs, and then broke that swing. So this is where we're short, and same theory here. So we're going to have a little locked-in profit on the Bitcoin, but bear traps, I like. I actually bought some Bitcoin and XRP down here on these traps just because, it's 50-some% down. We've met enough time element that I like. So anyway, here and there. And we're pre-solar eclipse, so I'm always watching stuff a month out, like I said, right? A month before the solar. I'm looking, that looks like a potential bottom to me. Again, assuming it goes up. I'm not buying a whole bunch amount. I'm not reloading the gun, right? I've been out of all cryptos since this action, which I guess I don't go back and show. Let me see if I got it on Bitcoin. No, it was right before this actually. Kind of had some action. Told me the highs were probably in, and I'll get out. There's like 800 other things to trade. I don't need to trade these positions per se. Good stop in the XRP. Kind of new for me, but it makes sense, right? Here's the 1-to-1 coming off. Here's the solar eclipse. Which, if you're wanting to be a seller, let's say you pick this bottom, like I did, I might be tempted to dump some here. And again, we had the bear trap, right? So you got to assume it's obvious we could go up here maybe and make some trap action. For every action is equal but opposite reaction. Hang with me and I'll get to the bar charts. Okay, let's move on. Here's the crude oil for the energy boys. Another putrid, similar deal. I think they created this move to hedge, and I think they did a good job. Again, they can hedge 10 years out in the future. Those 3 years out are $20 discount, by the way. So they thought it was all up front, but they still hedged it. I guarantee you. The hedging instrument for the big boys is called a strip. That you can do have many as you want per month, every month, average it out. Those strips are handy, easier to maintain, but anyway, but it's an average then. Here's the nat gas on the spot, pretty ugly, fugly. Just again, I'm assuming we'll just keep tripping out lows, eventually knock out this low, just how it is. You got to reload the gun. This pop up, took out everything. I gotta assume we're gonna have a pop down, take out everything. The weather's awfully benign. We're a long ways away from worried about any winter weather. Here's the S&P. We talked about not selling this. This is not a bearish pattern. This is our bull pattern. Again, trading undervalued. It had no breaks. All these little bitty ones. That's the only thing you can trade on, and they're great, easy, right? This is easy bull market because it was trading. Again, I don't mean to sound like I'm beating a dead horse, but you got to understand when you see these, you got to turn on the bull trading shoe. Or if it happens on the other end, right, you sell it. It's an easy sell too, if it's overvalued. Now the problem is when it's overvalued, it goes down much quicker. But you're fighting people here. We popped the high, had a little trap, and then fizzled, getting a little more troublesome. But still, you just got to assume this is a hesitate. This is the first break we had, right? Broke the swing and broke the trend line. So this hesitational pattern is not bearish until proven. Now it might be, right? But then the swing traders will get their fill once you get down to here. And I wouldn't buy a quick dip. If you start breaking these important swings, we'll probably break all the way back and make it probably a new low by the end of the year if it would break this hesitational pattern. Here is the euro, just kind of a piece. I guess I don't have these updated to the XRP. I don't have euro on my new one. Here's the gold. Just kind of there, right? Here's the old solar eclipse, right? The one from September. And it's right in the hunt. Right back in here was the solar. This is the new solar, the recent one. Pretty nice range to trade in. Probably a little too high. Maybe do one in the middle to give you something else to look at. But that's what you got to look forward to. And obviously that's from the December chart I did when I was doing December. But you can see the speed line is pretty accurate no matter what month you use. Now, again, since we made a new low, my dot of my barrel of my gun is now changed to this one. And that's just my experience. So now that's my new dot. And obviously we're trading gold. That's 33% down. Yeah, probably right in there will be the next target based on that dot right here, right? This, since we made kind of a little crackerjack pop, I'm looking at August 19th. Now, obviously I'd go down to 50%, but people can't believe, oh, gold can't break that far. We have no gold left. If we're out of gold, the highs are in. You'll learn over the decades of experience every time. I don't care what market, it's not immune to it. If you're out of a product, the market is done. There's nothing to sell. There's nothing to buy. Margins are terribly high. What are you going to do? Step into the futures, right? You're gonna buy a couple ounces of gold. Whoopie freaking do that day, right? I mean, this is the big boys contract that we're looking at. It's not the price of a 1 ounce bar of gold. This is a price of a large contract, and this one is the price of the silver. It's a 5,000 ounce contract, right? Not a 1 ounce bar. This is the price of a 5,000 ounce bar. So you took that 5,000 ounce bar that you got delivered on back in 1972. You spent about 10, 15 grand on it. Now you flop that 5,000 ounce bar at the pawn shop. Says, I need to buy myself a new combine or whatever. Maybe that's not enough. Maybe a couple bars. But again, that's how it works, right? No different than people who bought Bitcoin when it was dirt cheap and it went up massive. They made a lot of money. They could buy, expand their businesses based on that. And again, anybody that's been buying silver and gold, I told them back in here to not listen to the Asian guy on YouTube because that was an AI guy that was created by China. They had like 5 or 6 of them out there trying to keep the bull going, right? Because they were trying to corner the market. Well, now, again, you could, if you're, let's say, a semi truck driver and you could buy a new truck because you have enough silver, you do that. You get out of this silver. Of course, a lot of people got so hyped up they thought it could go to 500, maybe at some point down the road. But when you can buy a new truck for the silver you had, and that's your industry, that's your business, you can add money in your bank. You do that. If you're a farmer and can buy new ground by getting rid of silver, guess what you do? You sell the silver. Or if you're a hog guy and you want a new hog building and you sold silver to put up a new hog facility that's going to make you more money, you do that, right? That's if you're into a supply business and you can buy a new piece of equipment to improve your speed of your supply chain, you do it. I mean, that's what investment's for, not to hold forever. People who hold these forever, they're not logical. pickers, not pickers, stackers, excuse me. Well, and pickers too, but stackers that never get out. What's the point even opening your mouth? You don't care, right? You shouldn't. Um, but every thing on the YouTube talks about the 1 ounce bar per price. Well, that has nothing to do with this. 5,000 ounce contract, and people try to poo-poo the futures. Well, sorry, I came from the futures world. I was a broker for 4 decades, and anybody that bought a 1,000 ounce bar made money or sold it at the highs, right? Well, don't do that. You might not, if you bought Bitcoin futures, if you bought corn futures because you don't own corn, you still make money or lose money, right? You just don't have to worry about that uh, physical part threat. And maybe it's not as worth as much, right? Or maybe it's a higher value, right? Again, it's all in the plane of existence. Everybody that trades stocks, back in the day, you have to actually own the stock. Now it's all paper, right? So again, but it's the same concept. You don't have to have the physical, and there's a cushion there, right? The CME is the cushion. Oh, anyway, sorry, I digress because it just pisses me off. People think, oh, I don't want to trade the Bitcoin futures because I want to own the actual. Well, then that's fine if you never sell. It's a lot easier to sell. You call you get on Robinhood and you sell your futures out. That's it. Or call your broker and say, get me out. You don't have no 40 freaking 40 pin number and go to Coinbase and transfer this or that. It's way too complicated. And again, that's the ease of, but if you're going to keep it as a tax deal, avoidance basically, right? Because, you're buying a little bit here, a little bit there, and you're giving it to the kids. That's great. No big deal. That's perfect, actually. Anyway, here's the cattle. And I get preachy on that because, again, I've seen a lot of people get wound up listening to crap on the internet. Cattle look a little troublesome. This high, now again, like I've mentioned, about every 6 months, cattle seem to make a new high here recently. So if we get 6 months down the road and we haven't made a new high, something is a little different, right? You can just see, just creep, creep, creep. Here was one back here, and it paused for about, I don't know, looks like about a year, maybe even a year and a half, and then finally, maybe about a year and a half, it makes a new highs, and then it just, here's another area, and then broke back, actually had a correction, right, where it broke stuff, October, so, but we already made a new high, so, again, it doesn't have to do it for a while, but again, that's just some simple stuff, right, you can just look at it, 2-3 year breaks on the cattle, but at some point, you always got to worry about the twirling cow out in the field. At Christmas time, I can't remember the year, all of a sudden, mad cow, one cow with freaking millions and millions of cow was spinning out in the field. They blew that news up and broke the market limit down for, I think, 7-8 days. I couldn't trade it. Expanded limits, what a nightmare. This is the Bitcoin futures. You can see I've kind of drawn some stuff here in one of the master chart lessons I'm doing. Nice little bottom. I won't get into it. All right. And I'm going to sign off. Again, that was the faster moon, so I'm kind of excited about that. It took me a while to set up, and I also did the stock matrix, which I expanded some of the stocks, and and you can see I expanded. I'm going to take off the euro dollar on the on this newer one, and I replaced it with the bean oil, right, which is on its highs, near its highs. I haven't updated the bar charts yet, but I will be doing that. So that next video will have everything kind of. I think that'll pretty much be it. The only thing I might add is copper. I think copper makes sense to me. Silver is the residue of processing copper, basically. Most of the silver is produced by the residue of copper. So if copper keeps going up, then the silver will keep going up. If copper drops, then more than likely silver's going to drop, because again, it's the residue effect. And we also got to remember that there's a lot of old piles of in Alaska gold mining, right? Gold was the kingpin and silver was worth squat. So they didn't even try to process the silver out of those piles. There's probably a lot of silver that are starting maybe to get processed for, even some of the other metals are in there. They just process the gold out of those because, it ain't worth their money, right? So, but that's the other catch. You get up there and you get high. That's what fundamentals do, right? You get up there for too long, stays too high. The market figures out a way to get more supply. Whether it's melting stuff or at those prices, $120, I guarantee you those piles are worth some money that had a lot of gold in them. Zinc went up, all the metals went up, so those piles got some value. Those big old piles, and there's a lot of them through the old gold mining days that can now be processed for these other metals. Anyway, I'm off topic. All right, everyone have a great rest of have a good week, because this is a weekend. It is July 11th at about 1 in the afternoon. It's too hot to go outside, so I thought I'd make a video. Kansas is a sweaty ass pig right now. Shoot us. All right. Everyone have a good one.